Hi, this is Jack Slocum with Option Alpha. Today we're going to catch up on trades made in earlier videos, and then we're going to jump into our screener. We're going to filter through the symbols to look for symbols that are highly liquid with an RSI that shows a bearish indication. And then we're going to go into trade ideas and use that watch list to find a trade. Okay, so the first thing we're going to do is catch up on how our trades are doing made in earlier videos. This MACD's Iron Condor was an earnings play that was placed in the previous video. This trade's doing pretty well. McDonald's reported earnings and the price is sitting somewhere in the middle of this range, which is working out good for us. We're going to go ahead and hold for now. SkyWorks will be reporting earnings after the market closed today, so we'll see how that one does. This USO Iron Condor has actually had several attempts to close today. Hopefully it will close successfully before the end of the market today. And these two trades, as you can see, are working out pretty good as well so far. So one other thing to catch up on, the first trade that we made, the very first video in the manual trading bot, is this XOP Iron Condor, which closed out, took down 58.54% return on risk. It's turned out to be a good trade. Okay, so the first thing I'm going to do is set this liquidity filter to 3. And the reason why I'm doing that is because I only want to trade tickers where I can actually get a good fill price. What's really interesting about this liquidity indicator is it ranks all of the different tickers in the platform against all of the other tickers in the platform and determines that when we place trades in these tickers, one, how big is the bid-ask spread? It also looks at what point across that bid-ask spread, for example, the mid price being 50% across the bid-ask spread, do orders actually get filled at? And then how far is that slippage value there? Is that from the actual mid price? And the reason why this is important is when we're calculating statistics or we're looking at options positions, we're usually assuming we're going to get filled somewhere around the mid price. But if we have the opportunity to look at these liquidity stats, we can see actually trades in this particular symbol fill with about 3 cents slippage from that mid price on average. And this gives us some additional data when we're trying to pick what symbols we're actually going to trade in. So I immediately set this to 3. I'm going to go ahead and set my RSI value to 60 or higher. And then I'm also going to only include symbols that are in trade ideas. That's this little light bulb here. And you can see here, I have a little list of tickers whose RSI is a little bit elevated, that have good liquidity and are also included in trade ideas. And then I'm going to hit this copy button over here. And there's 10 total symbols. Then I'm going to hit this little star and I'm going to select new watch list. And I'm going to say RSI 60 plus and liquid 3 plus. I'm going to paste in those 10 symbols and I'm going to save this watch list. And then anytime, for example, I can come in on a different day and I can filter these, I can copy and I could click here and I could click to edit this watch list and update the symbols really easily. But instead what we're going to do right now is we're going to jump on over into trade ideas and we're going to see what type of trade we can actually find using those tickers that we just filtered by. So I'm going to click once again the star and I'm going to select the watch list that we just created. And here is a list of opportunities in those particular symbols. The next thing I'm going to do is, because we found symbols where the RSI is elevated, I'm actually going to look for bearish positions. If you look, many of these have a very low reward risk ratio. That means that we're basically going to be risking a lot of money to win a small amount of money. And anyone who's watched any of my videos knows that I try to avoid that at all costs. So I'm going to look for a reward to risk ratio of at least 80% or higher. Take a look at this Goldman Sachs short call spread here. The price of Goldman is currently $428 and the short call is at $430. So let's jump over and take a look at the max pain chart for this expiration. See where the most options are expiring worthless. So our max pain strike is 420. If you look around it, the other values are pretty similar. About 430 it gets to slightly higher value, and anything above that it starts to escalate more quickly. So it's currently above the max pain threshold, which in my opinion makes it more likely that this particular spread expires worthless. I'm going to go ahead and place this trade real quick. So I can probably do 2 contracts for around my $500 range. Let's see though. We could go somewhere around 230 You can try 230, which is around the mid price, and see if we can get filled around there. That's 540. That's a little above what I like to trade, but let's go ahead and do it. I'm going to put this in my manual trading bot, let smart pricing work its magic, and I'm going to place this trade. So smart pricing is currently working through these prices, trying to get me filled at the best possible price. We'll see how that works out. All right, does not look like we're going to get filled at 230. I'm going to go ahead and cancel that trade. All right, looks like we got some new trades in here. Let me go ahead and take a look at some of these. Goldman's price has fell since we originally looked at it. I wish we could have gotten to that first trade. Let me go ahead and try to fire this one off real quick and see what if we went to 117. So we would have a 51% chance at an 88% reward risk ratio. For a directional trade, this isn't too bad. It is very close to being in the money though. I really preferred that other one at a higher strike price. A bit longer of a duration, but a higher strike price is actually preferable to me. Let me refresh this one more time and see if there's anything new. So here we go. Here's this one that we were originally looking at. 54% chance at 81%. We're up at 430 now, which is much higher from the actual price than the other one was. You can get two contracts potentially. We would go down to 220, 223, see if we can get this filled. What would that be? I'm just going to fire one trade quickly. And boom, we just got filled at 223. All right, so we got this one filled. Not as great of a price as when we first started out. I don't know if you remember, we were trying to get 230, but we did get filled. So this position has a 446 max profit and a 54% chance of getting that, and a $554 max loss and a 40% chance of getting that. So it's basically like a coin flip. I'm going to go ahead and set my exit options here to 50% of the credit, since this one has a lower reward risk ratio. I'm also going to set the pattern day trading to wait 1 day. And that's it for this trade. So hopefully this will work out. I'll let you know in a future video. Okay, so the next trade we're going to make real quickly is an earnings trade. I'm going to come over here to earnings. Let's see who we can make a trade in. How about Starbucks here? What are they working with? We're looking here at Starbucks, and if we look, this iron condor that is outside the expected move that market makers are pricing in is plus or minus $2.78 or 3.14%. This position is currently 3.87% out of the money, so let's take a look at it. It's returning a reward risk ratio of 138% now, which is great. And if you remember back from the earlier videos, the first earnings video, I bet on long shots and I lost all 4. The second earnings video, I adjusted my strategy, and the plan is to bet on 10 earnings trades. And if I was to bet $100 to make the math easy, then out of those 10 trades, I'm willing to lose 3 of them if outliers occur, which would be 30% of the stocks that report or produce some type of outlier that causes a max loss. And the other 7 don't. And so if I lose 3 of them, that would be minus $300, and I win 7 of them, that would be plus $700, in which case my net would be plus $400. And because I'm betting $500 per position, ultimately my net here would be $2,000, which would make up for the original $900 that I lost on the long shot bets. So that's my strategy for recovery. So I'm going to go ahead here and place a worse price of, let's say, 54 cents, which is slightly worse than the mid price, allowing for a slippage of about 3 cents. And quantity wise, I'm going to do 11 contracts, and I'm going to select my earnings bot and let this trade fire away. And boom, it got filled at 55 cents. So there we go. Now we have, I believe that is my third earnings trade. I still have Skyworks after the market close. Now I have this one after the market close. I'll let you know how those do in the next video. That's it for today's video. If you got anything from this video, don't forget to like it. If you have any questions, ask them in the comments. On behalf of the OA team, we love you. Thank you for watching, and God bless.